firstly, take us through what the trend was like on the stock exchange today.
We saw that the stock exchange actually lost. The NSE index shed off some few pips. Yesterday it had closed at 3,600, and today it closed at around 3,570 points.
Well, since you are a currency expert looking at the Forex market, take us through what the current political trend is affecting the Forex market.
Since actually the beginning of the week, we saw that the jitters which were coming up in the coalition government were now becoming a bit wide, and this led to the currency actually losing a lot of pace of it. We saw the shilling weaken drastically on Monday morning to close levels around 7750. Today again, we saw the shilling actually again come under extreme pressure and to go to highs of 77.85. However, we saw a bit of retracement from a bit of support from sales from the exporters. So we saw the shilling actually close at levels of 77.50 by 4 today.
Well, what has the effect of the political tension been like on foreign appetite for Kenya's government securities?
As we move on, actually, like the government, the Central Bank of Kenya had advertised a week ago an 8-year infrastructure bond, which actually is supposed to close next week. Looking at the few months, that is in January and December, we have seen a lot of appetite coming from foreign investors on the Kenyan papers. We've seen a lot of appetite. So going forward, with what has transpired mainly from last week and this week, I expect a bit of pullback from foreign investors towards the Kenyan paper. And though still the paper is actually attracting at good interest rates, because like the paper which is closing for this month is at a coupon of 9.75%. We might see still interest coming in, but this time it will be a bit cautious. We might see cautious bids and also foreign investors actually bidding cautiously and holding on their positions.
Well, talking about interest rates, what has the general trend been like on interest rates in Kenya?
Looking backwards, maybe again 2 months ago, we have seen a steep fall of interest rates in Kenya. This one has been driven by the monetary policy as advised and controlled by the Central Bank of Kenya. We saw the likes of like the 91-day Treasury bill actually come from highs of 7.5%, currently at an average rate of 6.1%. We have seen also on long-term papers actually dropping also very drastically. Like for example, the benchmark 20-year bond, which at the close of 2009 was trading roughly above 13.5%, and currently is around 11.8. So looking forward, I also expect on the short term still, interest rate to still come lower, and this also the long-term side of the yield curve will have to take cue. So we still have room for interest rate to still come lower in the Kenyan market.